welcome to and that rockin' tune from way up north means it's time for Option Pit. I'm Andrew Giovinazzi, Chief Operating Officer of Option Pit. Mark is out for the next 2 days in Las Vegas. He might check in from time to time, but he's pressing the flesh in the land of fun. Actually, the last time I was in Vegas was with Mark. Okay, boot camp. Dates, right around December 10th. 3 days, 6 hours. All right, what will you learn? Right, the risks associated with income generating. Okay, understanding really what that means. Wheel trade, basically how to sell puts and manage those. Increasing your profitability, directional trades, and an introductory to delta neutral trading. Okay. This is the boot camp. We don't really discuss the vol products per se, although we do discuss volatility quite a bit. So if you're a beginner and you want to learn and you want a good introductory course, we're also rewriting our silver course, making that a little more accessible, and we're going to basically turn our old silver course into more of a glossary for option terms. All right, but if you enroll now, you get exclusive access into our professional chat room. Okay, all kinds of goodies. Blog yesterday from Mark. Dun, 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 dun. The Fed is not going to raise rates, and we actually had a little look here on housing stocks, which I think we'll take a look at today in our chat. I got a few ideas for the chat today. This is an interesting name. We'll get to that later though in the chat. Let's see here. This is what I want to talk about. Okay. Okay, we opened down, right? That's the Europeans, I guess, having to sell something. So they sell our stocks and not theirs. That's one of the jokes of one of the guys in our chat room. And I can't disagree with them. However, okay, let's take a look-see here. Realized vol is at are we at the low of the year? Okay, we're not at the low of the year. Okay, but if we're not the low of the year, we're close to the low of the year. We have seen this before. We will probably see it again. Implied volatility is, I will just say, at least for now, vastly overpriced. Okay, so buying longer-term volatility, I just think the market right now currently can't reconcile the fact that the Fed is done. I think the little pullback we had yesterday, even though the Fed's really not worried, which usually should mean a good thing, certainly couldn't propel us to new highs. But what we're not seeing is this implied volatility drop just quite yet. Just can't quite drop. It's been steadily going up for the last couple days. It's not big, but there's still what I would say is a considerable amount of worry in the market. So there's not that crazy willingness to sell. It doesn't mean it won't start at some point, but we haven't seen it yet. So, but I'll tell you what, if we really can see that VIX drop and they start coming in and you see just massacring volatility here, also look in this part of the term structure in December. Okay, the VIX, this is the VIX sensitive area here. We're looking at around DS20 now. They start to hit that and you start seeing vol coming way down. You know, I'll take even 12.5 vol for the DS20 strike. Okay, I'll take 11.5 for DS26. If you get a half a point out of that at the money, we are going to rip. I'm just telling you, right? Because it feels like there's some holding back. and there's some waiting for some shoes to drop, and there's really no shoes dropping. Okay, Japan is a mess. They're going to have to deal with it. Europe is less of a mess. It seems like they are dealing with it. Right? Because you're not seeing the euro in free fall anymore, things like that. Right? Can all this change overnight? Sure. But I don't think we're going to really have that mind-blowing rally until we can see the vol drop a little bit more. Right? Because that rally needs, I think the rally now needs supreme confidence, and you get supreme confidence with people coming in and starting to sell some downside puts. Right? Because remember now, selling downside puts at all-time highs is a lot more risky of a proposition than it was when in the middle of October when we were trading, 1885 on the S&P, on the SPX. So that's what we're looking for. So trades that probably look okay. Real simple. Still like time spreads. There's a lot of very cheap volatility in the name stocks. The LinkedIns, the Babas, maybe even the Amazons, the housing stocks, stuff like that, right? Maybe even double calendars. Alrighty. But until we really see that real hit in vol, I don't think we'll make those highs, right? Something really fantastic for the Santa Claus rally that, we've all grown to love here for the last 3 or 4 years. Right? It's been pretty consistent since 2011, except for the little shock we had in the election in 2012. But other than that, things bounced pretty hard from there, and it gave us 2013, which was a giant rally. So, so from where we are now is I just want you to get the gist of we have very expensive vol. So either the market is trying to hedge, looking for more, or we just can't quite get the sellers to come in. So I think it's a little of both. All right, everybody, and with that, I will see you all in the pit report today and in the chat momentarily. You all have a good day. Bye-bye.